The US and China agreed to a 90-day trade tariff reduction. Trump was in the Middle East making deals, and US inflation cooled further. As a result, US stocks rose, with the S&P 500 gaining 4.5% and turning positive on the year. The US dollar also gained for a fourth straight week. Can gains extend from here? I'm Fiona Cincotta at StoneX, and I'm joined by Global Head of Content, John Kicklighter. Thank you for joining us, John.
Thanks for having me.
So what are the general market conditions we should expect to deal with next week?
I would say that market conditions are very much a recovery phase, recovery from a self-defeated or self-owned initiative, which was the Liberation Day tariffs, which hit in early April. But that successive climb and recovery can only go so far before you have to start kicking back into new positive outlook for the global economy. We do have, the U.S. and China, as you said earlier, finally doing a 90-day respite against their very aggressive tariffs. That's one method of lift. We also have the situation with Russia and Ukraine, where they're starting negotiations for the first time in 3 years, which is a light in a very long, dark tunnel. And you even have Iran talking to the United States about its action. So there's all these potential recovery events, but once you start getting back towards record highs like you have with the S&P 500, then you have to really start to gain traction through new and genuine optimism. So growth, so earnings, so through yield, and nothing really in the backdrop suggests that we have that. Now, all that being said, we still have very much the fade in volatility. The markets are going into the period where we usually expect there's quiet as we get into the summer doldrums. Obviously, we're not there yet, but it's starting a long journey typically around this time of the year, with the VIX and open interest usually declining. This past week was actually the 20th week of the year historically for the S&P 500 over the past 100 years. Was the second worst week of the year. And obviously we've bucked that trend. Those are all averages, of course. But now we go forward into expectations that quiet, near record highs, at least for something like the US indices. And now the markets want to see something more tangible, more viable. And that's going to be a little bit more difficult to come by. And progress may also be more difficult to come by, especially towards the upside.
So what are the most potent themes that can upend the calm, either for the bulls or the bears then?
Sure. The greatest threat is obviously one of these improvements actually falling apart. It's an unbalanced potential. So if the US and China's trade negotiation seems to be going well, they're more likely to be going well incrementally. But if they go bad, they're going to probably go bad very quickly, as we saw with the implementation of the 145% tariff on the US to China. So that's going to be a caution hanging over the market. We also have the risk that after all that turmoil and economic impact over the month of April, that it will carry over and not show that same relief that the markets are getting in business confidence or in these activity surveys like we have next week, and hard data not demonstrating the quick rebound and steady forecast into the coming months. That is a great concern. And of course, we also have inflation. Kind of seems like it's been in the backdrop, people ignoring it because we have much more pressing issues. But now we have the carryover of these tariffs, and you have Walmart this past week suggesting that they're going to have to raise prices, which they're famously known for, as low as prices as possible. So these types of concerns can carry over to interest rate expectations that can curb growth, which is it's kind of a more boring, if you will, macro theme, but it is very consistent.
And so what is the top event risk next week that can spur these themes or kick off a new focus, do you think?
Sure. The coming week is actually quite light in terms of scheduled macro events. I don't think there's anything specific that can really be its own groundbreaking update, not like a FOMC rate decision or a non-farm payrolls per se, but you do have some important data that will be more important with the context of those themes. So Monday, I would watch for the run of April data for China. We have industrial production, we have fixed asset investment, housing prices, retail sales, unemployment. That's a nice rounded look at China. A lot of people take their data with a grain of salt, but it's still very important to register all of that. Tuesday, we have actually the rate decisions for the week. We have the People's Bank of China, their 1 and 5 year loan rates. And then you also have the RBA, which is expected to actually cut rates by 25 basis points. It's going to be interesting to see what they say out in APEC. Obviously, the RBA is a very important central bank for the region. And seeing how they're reacting, responding to the economic tides and the inflation tides is going to be very indicative about what the next phase is going to be as their central banks come across over the next month. And I would also register Home Depot earnings on Tuesday, because that is going to definitely tap into some of the consumer trends in the United States, one of the largest engines in the world. Wednesday is pretty dead. I would say UK inflation can be important in context, or Mexican retail sales, or Baidu earnings. So an insight in China after we had Alibaba this past week. The big kind of run of data that's more of a global macro look comes in Thursday, because we have the PMIs, the May PMIs, and that's a good proxy view of economic activity, and we get it for Australia, Japan, the United States, UK, Eurozone. So it's a good comprehensive view of some of the biggest dense view of developed world GDP. So if those indicators show a swing significantly higher, significantly lower, it can have a material impact on what the general state of expectation is for economic growth going forward. Friday is also relatively light, maybe Japanese inflation, Mexican trade balance, but that only gets into very particular areas of monetary policy or expectations of trade wars, which have, as we talked about, settled down a little bit.
Excellent. Well, thank you very much for your analysis, John, and highlighting what to be watching for the week ahead. We look forward to speaking to you again soon.
Thank you.
For more videos like this, please do like and subscribe.